Uh, Hi, Jeff. Hey, we're not changing our dynamics today in terms of portfolio construction. I think all along, our view has been that, inflation is going to run hot and it's going to get hotter. And, we've seen that throughout the year. I think that trend is now even continuing more as we're seeing more different variants of COVID, as we're seeing continued supply bottlenecks throughout. It's just going to lead to higher sustained inflation, which, as we know, the Fed has been honing in on lately. So it's tomorrow's number is going to be interesting. I think it's going to still run above trend, and our view still point is that you want to own hard assets and shift away from sort of the growthier areas of the market like technology.
Notwithstanding the Nasdaq's decline yesterday, it's actually had a winning week here. So, how robust is your call on moving away from the tech sector at the moment? Because every time we get a bit of a sell-off or some volatility, it does feel as though, like Pavlov's dog, the retail investor and maybe the institutional investor as well goes back to those technology stocks that have done them so well over recent years.
Yeah, well, look, I think it's hard to stay away from things that you have this low growth environment in terms of economies, given, we've had massive stimulus, which has helped reflect higher growth. But reality below trend, if you look at growth continually, it looks a lot lower without stimulus. So you look at it where we see rates in the one handle for the 10-year, we're seeing the 2 year starting to move up. So you're seeing a flattening of the yield curve. And I think that tends to see more investors dive into sort of the growthier aspects because they believe that in a lower growth world, you want to own high growth assets that keep up with inflation or obviously outperform inflation. I think this time, though, it is going to be a bit different. In the past, of course, we've had a Fed that's always sort of had the markets back. We've had this sort of Fed put or Powell put, as they say. That dynamic is definitely on the change today. We've noticed that sentiment shift from the Fed here in the past several weeks, and that looks like it's continuing. So every time, like you mentioned, that you've seen stocks start to come in a pretty good way, they've always rebounded. You always buy the dip. This time, I think it's going to be the potential for an error in terms of judgment on investing in sort of those growth areas is going to be prevalent today. And you're starting to notice that. I mean, if you look at some of the things that you and I have talked about in the past few months, some of the things even our hedge fund, Livermore, has been short in the past, things like ARK Investments or Tesla, of course, or even Meta, Facebook. I mean, those stocks have lately have been underperforming. And I think that could be a telltale sign of things to come.